Okay, a very good evening, everyone. The time is 7 p.m. Today, we have Thakral Corporation joining our Corporate Connect session. And my name is Sunny. I'm from SIAS, and I will be your host for today. I can still see a lot of attendees and viewers streaming in from the various platforms. But first, let me welcome Thakral Corporation first this evening, as well as our audience from YouTube, from GemLife platform. This webinar is supported by SGX Group and organized by SIAS. Okay, so let me give you an introduction to the very interesting company that we are hosting today, Thakral Corporation, which is listed on SGX Mainboard since 1995. It is a diversified investment group with core operations in Australia, Japan, and in Singapore. In Australia, it develops and manages the over 50 lifestyle resort via its ASX-listed GemLife communities. And in Japan, it also holds key commercial properties in Osaka as well. Beyond property, Thakral also manages and markets leading beauty, fragrance, and lifestyle brands across Asia through retail and e-commerce platforms. So the group is also the exclusive distributor to my favorite drones company, which is DJI drones, and related equipments in 7 South Asia countries as well, including India, where it is expanding into agriculture and enterprise drones. So through subsidiaries and investees firm, additionally, Thakral also makes strategic investment in new economy ventures and often seen as a cornerstone or early stage investors to create synergies and explore opportunities to align its network of business. But today we will kick off today's webinar session with a market highlight section by our partner from Tiger Brokers. Let me welcome Chief Market Strategist from Tiger Brokers, James Oi, who will give us a market highlight. Over to you, James.
Yes, thank you, Sunny. So let me share my screen first. 1 second. Okay. I hope that everyone can see this. Okay, 1 second, please.
Yes, James, you can see your presentation.
Okay, so hi everyone. Good evening. I'm James, market strategist at Tiger Broker Singapore. So today I'll be sharing some insight on the Singapore market, and I'll keep it to about 10 to 15 minutes. Okay, let me go through the disclaimer first. This presentation is provided to you for education and sharing purpose only and does not constitute to any form of advice. Past performance is not indicative of future performance. Okay, a little bit introduction about myself. I have been in the financial industry since 2007. I am a speaker with SGS Academy and currently serve as the market strategist at Tiger Brokers. Okay, if you have not heard about Tiger Brokers, just a quick introductions. Tiger Brokers is a leading global brokerage firm. So we entered the Singapore market in 2020, and our headquarters is based here in Singapore. So we are holding more than 81 licenses globally across markets, including Singapore, Australia, New Zealand, the US, China, Hong Kong, supporting over 10 million users worldwide. We are also listed on Nasdaq. Okay, and if you have not yet opened any account with Tiger, we are giving out some welcome rewards as well. So basically, you can earn up to 1,000 Sing dollars when you start depositing money into your trading account. Terms and conditions apply. For example, if you deposit more than 3,000, you will get an instant 100 Sing dollar commission voucher. If you put the money there for 30 days, you can get another $100 stock voucher itself. So you can scan and register through this QR code. Okay. And we are also running a SG60 campaign as well. So we are giving out some attractive rewards to our customers. So basically, we are offering 0 commission on all SGS listed products from now until 17 October. So basically, you can then trade SGS listed stocks, ETF, DLC, SDR, commission free until 17 October itself. So to enjoy this promotion, you can just log into the account, open the event page on your app. You can find this information in the profile tab, and this reward will be showing here in one of the rowing banner itself. Okay, so once you hit on the banner, you can see this reward. Okay, other than that, we are also supporting CPF and SRS investment via cash boost account. So to find out more, you can just go to profile tab and tap on the banner. You can see this promotion we are offering and the instruction on how to link the cash boost account with CPF and SRS investment itself. Okay, so let me share a bit on the Singapore market outlook. So here are some of the important news last week. For example, JD.com will partner with Partners Group and Isa Hill Properties to launch REITs on SGX next year. Thomson Medical Group unveils the Johor Bay developments worth of 5.5 billion. Capital Land Commercial C REITs will be listed on the Shanghai Stock Exchange and will raise about 375 million Sing dollars through the issuance of 400 million units itself. Lastly, Singapore core inflation is 0.5% in July, which means the Singapore inflation is largely under control. Okay, key things to look out for this week are all economic data. Basically, the earnings season is almost over. You will see some market moving economic news this week, including the US jobs opening data itself on Wednesday, ADP non-farm payroll on Thursday, and both US non-farm payroll and Singapore retail sales figure on Friday. Okay, here are the STI component stock performance as of last Friday. So this table shows the top performers and worst performers in terms of week to date, month to date, and year to date returns. So some key takeaways include, firstly, Jardine Matheson continues to be the top performer, one of the top performers across three timeframes, week to date, month to date, and year to date itself. So I reckon investor may be anticipating some positive initiatives from the new CEO, Lincoln Penn, when he comes on board at the end of the year itself. So this is why Jardine Matheson probably go out in prices. Okay, and Thai beverage continue to be one of the worst performers in terms of these three timeframes itself. Secondly, as rate cuts draw closer, nearer, we are starting to see some REITs outperform as well. All the bank stocks saw some losses last week, and I reckon investor may be waiting for the upcoming FOMC rate cut decision to assess how the bank will perform going forward. This is why there could be some profit taking in the bank itself. And this shows the year-to-date performance of the STI index itself. Okay, so far this year, the STI index returned about 17%. All sectors are returning mostly positive returns, except for consumer discretionary itself. Suffice to say, aside from the financial sectors, other sectors, other industry have performed quite well and have collectively contributed to the STI strong performance this year. Okay, this is the FTSE Singapore All Cap Index itself, which measures the performance of small, mid, and large cap stocks in Singapore. So, as you can see, it's approaching 2007 high. Currently, it's trading maybe less than 5% than its all-time high itself. So this combined with the previous slide I show you suggests a widening market breadth. So we are seeing a broad-based recovery. It's not just the financial stocks performing well. Other sectors, including small and mid-cap stocks, are also rebounding. So this is why you should also look at other small mid-cap stocks other than the large cap itself. And SDI remains one of the top performing stock indices globally so far this year. The year-to-date return is about 17%. And it once came down as much as maybe 15% in April, but he has now recovered quite strongly and is trading near its all-time high at the moment. So 2025 looks likely will become the fifth consecutive year of positive returns. And if you compare the STI index with other indices in terms of the 5-year annualized return itself, you could see that STI is about 15.9%, S&P 500 is 14.75%, Hang Seng Index is just 3.55% in terms of the 5-year annualized return itself. So STI is doing quite well in the past few years. Okay, just remember that Singapore is a trade-oriented economy, so that if there is an economic or trade slowdown itself, it will hurt the Singapore economy. But it just seems like there is lesser recession risk in the US or China compared to half a year ago. And the concerns about a trade slowdown are not so worrisome. I would say that the investor sentiment is doing much better at the moment. But if you were to look at the export number, the Singapore exports slumped to about 4.6% in July, worse than expected. And we could also see from the 3-month moving average, it actually increased by just 1% in July. And this is much lower than the previous 7% increase in June itself. And we also hear from the Enterprise Singapore that the Singapore is currently they are currently projecting the export growth in 2025 to be in the range of 1 to 3%. So it just looks like the export figures itself for the remainder of the year will remain challenging. Okay, but GDP growth looks quite decent this year. The MTI actually forecasted the GDP number to be in between 1.5% and 2.5%. And I also reckon that what has been supporting this year's stock market rally is the whitening market breadth. Meaning to say Singapore is not only lifted by the financial sectors like in the past few years, but also by other sectors and small mid-cap counters as well. So this widening market breadth actually indicates a healthier stock market. And we could also see the corporate earnings have been resilient, and there is also some MAS-led initiative to improve the investor sentiment as well. Okay, so let me quickly touch on the MAS initiative. So in February earlier this year, MAS actually announced some measures to strengthen the competitiveness of Singapore equity market. So basically, they focus on demand side, supply side, and regulatory side itself. I won't spend much time on this, but just remember that the market participants are now quite excited about the demand side measure, which is the 5 billion equity market development programs itself. So basically what it means is that MAS will allocate 5 billion through selected fund manager to actively invest in the Singapore listed equities. So they want to focus beyond the large cap counters itself. So in the first phase, there is about 1.1 billion being deployed to asset managers such as Avanda, Fullerton, and JP Morgan. A second round of selections of capital deployment is expected later this year itself. And I would say that investors are excited because they are now speculating on which small and mid-cap companies will benefit from this 5 billion fund flow itself. Okay, so, and year to date, the SDI returned about 17%. I think some investor probably are still quite under-invested itself, that their portfolios may not have gained as much as 17% so far this year. So if you are still underinvested, the next question you could be asking is that when will we see a corrections itself? So if we were to look at the past 25 years average monthly performance, September itself usually sees some corrections. So on average, the September return negative 1.15%. So this also coincides with the US S&P 500 seasonality as well, because typically S&P 500 doesn't do quite well in September. So if you were to ask when will we see a corrections, maybe September would be one of the better timing to accumulate. Okay, let me quickly talk about interest rates. So a lot of Singapore stocks are paying dividend, so it's quite important to understand the movement of the interest rate itself. To put it simply, as long as interest rates are coming down, dividend-paying companies will remain attractive as long as they can maintain the same dividend yield. Because investors are getting a relatively higher dividend yield compared to a risk-free asset like a government bond or FD itself. So just bear in mind that all the STI component stocks pay dividend, and a lot of the Singapore companies also pay dividend. So as long as the interest rates are coming down, generally Singapore stock market should do well. And basically the interest rates in Singapore are correlated to the Fed fund rates. So if the Federal Reserve cuts rates, Singapore interest rate should also come down itself. And at this moment, the labor market is probably weaker than expected in the US itself. So basically, if the labor market continue to be weaker than expected, Federal Reserve may want to cut rates soon. So this is the US futures market. Basically, it's now suggesting that we may see 2 rate cuts in 2025 and 3 rate cuts in 2026 itself. Generally, I think the US is overdue for a rate cut. So this, if they continue to have some larger than expected and sooner than expected rate cut itself, it should overall benefit the Singapore stock market. Okay, that's all for me. Thank you. So over to you, Sunny. Thank you.
All right, thank you, James, for that insightful sharing on some of the key updates on the Singapore market. I have a quick look at the chart earlier. I think STI today touched a new all-time high. We touched the 4,300 level. So probably that sharing by James will give you some insights of why Singapore market is performing so well. And one of the company that's listed on the Singapore market is, of course, Thakral Corporation. So I will now pass the time to the management team from Thakral Corporation, and the CEO of Thakral Corp, of course, today is with us, Mr. Beetle. Over to you, Mr. Beetle.
Thanks, Sunny, and thank you for having us on this on your webinar. Yeah, and let me I hear from Sunny and James that there are a lot of participants today. So let us take you through Thakral Corporation. We've been listed since 1995. We should go to the next 2 slides, please. Yeah, we've been listed since 1995. We basically have 2 core platforms. One is our investment platform, where we have our recently listed company GemLife, which also for us is a large milestone. It helps underpin the strategy that we set out to achieve and this is a good outcome of that strategy and confirmation that we're on the right path. We'll talk about it more as we go down. We have a property portfolio in Japan, and we are also looking at India as our next growth phase into the property sector as well as in the lifestyle business. On the lifestyle front, we've got basically the beauty fragrance business, which is primarily targeted in Greater China, which is mainland China, Hong Kong, as well as Macau. And drones business, the DJI drones business in South Asia, which will be exclusive distributors for 7 countries in South Asia: India, Nepal, Bangladesh, Bhutan, Sri Lanka, Pakistan, as well as Maldives. And then we've also taken on so-called a distributorship of Nespresso for India. That's a huge brand for India, and we've got other initiatives within the drone space in India. We'll talk about that as well. Company's been listed, as I mentioned, 1995, but unfortunately, still trading trading at a very large discount to book value, as you can see in the chart there, just 67% of book value. And PE ratio, because of our one of strong gains that we've got from our listed entity here, we got just at 1.4 times PE. Yeah, and NAV is also at $2.12. Yeah, some facts and highlights for yourselves. Profit for the first half year is 109 million. Out of this 109 million, almost 101 or 102 million comes from our listing in GemLife, and the remaining 7.3 million is from the lifestyle business for the first half year. Revenue of 160 million, primarily from the lifestyle business. Thorsten, I've got my COO, Thorsten, here as well. He'll walk you through the lifestyle business after I finish with the investments. And then we've issued a dividend of declared a dividend of 3 cents. And like I mentioned earlier, asset value is $2.12. Yeah, go to the next slide, please. That's an image of the IPO that we had in July 2025 of GemLife. We were the largest IPO in Australia for 2025, raising 750 million Australian dollars for GemLife. The IPO price is at $4.16. The price currently trading is at $4.68. And basically, we have the entity there. It is now listed, so you can go to gemlife.com.au and look at it for more details. But generally, I take it to the next slide. With a market cap of almost 1.8 billion, what we have is a so-called we are in the over 50s lifestyle resort style lifestyle living. We don't call it retirement because a lot of our residents there are not really retirees, but it's a unique business model. So to understand more, I would encourage you to go, visit GemLife's website, and even if you need to purchase GemLife's shares as well. It's a great company. A lot of excitement in Australia on the listing, and the Thakral Corporation, after the listing, owns 16.8% of the company. We have effectively 64 million shares. Going forward, we will be reporting the stake as an investment. So basically, whatever gains we get above $4.16 per share will be our profits for each quarter that we will be declaring as the share price movements is there. That's because it's no longer an associate. But anyway, take you to the GemLife got almost a pipeline of 9,900 houses, which they've already acquired land. So this is the path. So that path is going to take them at least the next 10 years to build out. So quite a clear roadmap ahead. Yes, next sheet, please. Take you to Japan to show you a glimpse of our Japanese properties. We've got 6 commercial properties there and one small hotel, business hotel. All the occupancies are almost at 100%. Some rollover of tenancies as they come in. We roll over at a higher price, or depending on the market. At the moment, market still sort of rentals. Japan is a hot spot. Rentals are seeing uplifts and a lot of excitement in Japan. We also continue to look from our portfolio perspective. We continue to look at better opportunities on where we can invest, and then sort of try to recycle our capital as well. And we bought these properties, some of them from 2014. So a lot of them have doubled in value, more than doubled in value, and given very nice, comfortable, returns for our shareholders as well as our co-investors. Yeah, over to the next. And this is our latest so-called keeping the time in mind, and we've got a short presentation, so I'm moving a little bit faster. Keeping the looking at India as a great place to move into, we sort of acquired a 13.6% stake in this great real estate, 20.7 acres, which can generate about 5.5 million square feet of developed area. The Thakral family already owned the land, so we sort of worked on it for the last 3 years jointly with them to see how we can the LISCO Thakral Corporation can take a stake in it, and we took a 13.6% stake. The intention, maybe we can take it to the next. This is in the heart of Gurugram, which has a lot of the Fortune 500 companies hub in that area as well, and we are in the center of the new Gurgaon. And literally, everything is around us. The highway linking to the airport, just 23 New Delhi Airport, just 23 minutes away from this site, and we are on the main highway as well, the highway that leads from Delhi to Bombay. So the site can't be a better positioning. The families had this site for over 30 years. This land over 30 years. So very clean shareholding, very clean. And when TCL made the investment, Thakral Corporation made the investment in this land in December last year. All the due diligence was done. So great parcel. We are now working with potential to create it into a healthcare hub, as well as mixed development of residential come commercial. For the healthcare, we are in talks with some of the main, the largest brands in India. On getting them to operate the hospital and possibly even build out the hospital, where then our function is like an asset manager, reducing the area that we understand best, and reducing our risk factor as well. Same time creating a medical center around there, and then creating a value add functions for the hospital, which are complementary to the hospital as well. And could give us good returns. Mixed development, residential development, we could do about almost like 3.1 to 3.5 million square feet of residential. There's a business model in India called joint development, basically where the developer, the core developer, and we're in talks with some of the top tier developers, and the business model normally is based on that they take on the whole risk of developing. You get a revenue share or an area share. So that de-risks our position substantially and could give us a very strong returns over the next 5, 6 to 10 years. We, as a larger opportunity of what do, we continue to look at different opportunities, and one of them could even be like, do we increase our stake in this land? And those are all the discussions generally continue taking place. Yeah, over to you, Thorsten. I'll pass the ball to you to talk on the lifestyle business.
Great, thank you. Good evening, everybody. Let me talk you through our lifestyle segment, and if you can move to the next slide, please. So 3 pillars in the lifestyle segment. So the first one is DJI. I think everybody knows DJI, particularly for the drones that they're making, where they clearly are the market leader. And we have exclusive distribution rights for 7 countries across South Asia. But if we go to the next slide, DJI does not only make drones, but also is quite successful in a range of other audiovisual components and products, ranging from professional microphones, including gimbals, that stabilize either your mobile phone or your camera for video shooting, to action cameras that are quite successful as well. And if we go to the next slide, we can see that in particular in a market like India, where drones at the moment, or the importation of drones, is still restricted by the Indian government, we have been very successful in launching some of the, still called secondary, but no longer really secondary products from DJI, because they have become market leaders in their own right. And in particular with some of the action cameras or that we're selling from DJI during the recent Prime Day on Amazon India, we were basically the #1 brand there, and beating out some of the bigger names in photography, or the more traditional names in photography, like Canon and Sony. Yeah. Now, what's interesting about the DJI business, and we've had this distributorship for probably around 10 years, is that we have also started to leverage the knowledge and the insights that we have into the sector, and building some new businesses around that can create additional value. So we've set up in India, I mentioned this before, the importation of drones is restricted. So we basically set up a company called Bharat Skytech that will manufacture drones and drone components for agricultural drones in India. So, we're taking advantage of the fact that, drones can't be imported, but that there's very, very significant demand from the agricultural sector, who need drones for, pesticides, for seeds, for field surveillance, etc. And we're setting up a business that can basically supply local manufacturers and assemble their own drones, and then market and sell them to the agricultural sector. That also ties in with, I think, which we see in many sectors, this big make in India push. So I think it's a business that we think will grow quite significantly. A second part of, again, an investment that we have built on top of our DJI distribution is in Skylark Drones. Skylark Drones is a software company, essentially, that specializes in software as a service for drone operation and drone management. Yeah. Again, I think both of the Bharat Skytech investment as well as the Skylark investment are really, leveraging the skills, the knowledge, the asymmetric access that we have in the drone ecosystem, and in investing behind this. So the second pillar of our lifestyle business is the beauty and fragrance business. So, the main focus of this is in Greater China, as Beetle mentioned before. So we are the partner for L'Oréal Luxe for several of their brands in mainland China, in Hong Kong and Macau. We open brand stores for them in shopping malls, in department stores. We also sell the brands into select beauty retailers, like Sephora, and also on e-commerce platforms. And we're showing some of the brand names here. I think many of them you may also be familiar with from Singapore. But again, our focus is on Greater China, so not on Singapore. I think a lot of the growth there, comes from opening new stores, also taking on new brands. Earlier this year, we took on a Chinese skincare brand that L'Oréal owns, and added that to our portfolio. So we now operate as a proxy for our growth trajectory. More than 60 mono-brand stores across our brand portfolio in mainland China, Hong Kong, and Macau. And of course, over time, we'll also very selectively and judiciously add new brands to our portfolio. So again, interesting about the beauty business is that we're not only active as an investor, as an operator, as a distributor, but also as an investor. And we have a stake of just under 10% in a global beauty device platform called Current Body, or the name has recently changed to the Beauty Tech Group. We started this about 5 years ago as a joint venture in China, a 50-50 joint venture. We then swapped our share into around 10% in the parent company. And as you can see there from the statement or the headline on the slide, they are planning an IPO later this year. The third leg, or the third pillar of our lifestyle business, is our official distributorship of Nespresso in India. The latest addition to our business, we started last year with an e-commerce store in India, and then in March this year opened our first retail boutique in a shopping mall in New Delhi. And of course, we will continue to expand this both through new boutique additions, also to expanding to new e-commerce channels, and to some of the modern trade channels, where I think in other markets where you would also find both Nespresso machines and Nespresso coffee. An interesting channel, of course, also is the hotel business. As most of you will know, a lot of 4-star and 5-star hotels will have Nespresso machines and coffee in their room for the guests. And use the machines also in some of the F&B outlets, right? And that's obviously a channel that's also very attractive and that's growing in India. And let me hand back to Beetle. I think you're on mute, Beetle.
Mr. Beetle, you're on mute.
So sorry. Yeah, hi. Thanks, Thorsten. Yeah, I was going ahead. Basically, just before I start on the financials, just quickly to touch on the lifestyle business. We have our core focus there is still on the luxury retail, whether they are the DJI buyers in India, whether they are buying fragrance, or whether they're buying Nespresso. They're all in the same luxury retail sector of the segment of the market, and we basically understand this business from a long history doing it, and that's where we look at like Thorsten mentioned, not only as operator, but also creating value, whether that is by investing or whether that is by partnering up with other stronger companies, or how we can increase value. Is our core philosophy over the last 10, 12, 15 years now, is basically how do we create value. That's what I mentioned earlier. The GemLife listing basically endorses the strategy that we set out in 2010 to start creating value is basically starting to pay off. So we've got GemLife, one listed entity. Now we've got Current Body. We continue looking at other areas how we can do that. Now we are entering into the Indian real estate space as well. So looking at how do we create value. Yeah, over to the financial highlights here. I think I covered a lot of this on the earlier page, with 160 million in revenue. 7.3 million profits came from our lifestyle operations for the half year. If you look at the segmental announcement that we have, actually our capital deployed on our lifestyle is actually very minimum. So the returns are actually very high for our lifestyle business. And on our the 101 million came from our listing of the GemLife but we will continue to now report it as an investment on our books. Yeah, and yeah, go ahead. Next slide, please. Here we've given you a quick revenue breakdown. So just to give the earlier slide, please. Yeah, thank you. We've given you a revenue breakdown by geography. So just to give you a feel, South Asia means mainly the drone-related business, which is cameras, the gimbals, etc. With DJI and a few other brands. Basically, we saw a 30% growth, and the growth for the previous year was almost similar as well. Now this is year on year for half year last year to half year this year. And for the beauty products, which are mainly for Greater China, we saw sales go from 31 million to 38 million for the half year, or a 22% increase. The remaining is basically more like trade opportunities into North America and other parts of the world. Although it is quite significant, but the so-called the impact on our profitability is minimum for that particular trade-related products. So our reliance is still pretty much on the Greater China and South Asia. Next sheet, please. Most of the revenue we book basically comes from the lifestyle because of the accounting treatment. And here you can see from the profitability which you mentioned earlier, the segmental results for the 6 months. 7.3 million came from the lifestyle, 106.8 of which 101 million was from GemLife itself, from the IPO. Yep. Next sheet, please. Balance sheet. We got a strong balance sheet here, very low debt, and there was another 32 million so-called dollars that came back after GemLife IPO, which will be reflected in the next half year. So taking the cash number back to about almost 35-40 million. And of course, with giving us more headroom to grow the company. Total debt is only 73 million. So net debt just is a fraction of the balance sheet. So very, very strong, healthy balance sheet we've got there. Our return on equity for our shareholders, as you can see the tracking here, in 2023 we had 14.9% effective return on equity, and in 2024 18.4%. We have not tried to put a number on 2025 half year. We'll do that at the end of the year. Right. And the next sheet will show you our annualized returns to shareholders. Our annualized return, you heard from James earlier, for SGX, we've done 17% thing, and for Thakral, our annualized return over the last 5 years is sitting at 39.13%. This information comes from Bloomberg. Total shareholders return for the same 5 years is 275%, but 275% returns for 5 years. We've paid out a very steady 4 cents dividend over the last almost 10 years now. And whenever we have a special event, we do pay out special dividends as well. So for the half year, we paid out 1 cent at this point, and as the year progresses, we'll see our cash flow and then decide on if we do a little bit more of that. Thank you so much for your time. We are here for any questions that you may have on the business.
All right. Thank you, Mr. Beetle, and
thank you, Sunny.
the Thakral teams for their insightful sharing on the Thakral business. Do stay with us, Mr. Beetle and Mr. Thorsten and Mr. Anno. We will now move to the Q&A section. I do see a lot of questions coming in from our viewers on Zoom as well, on our partner broker, Tiger Brokers platform as well. So maybe I would take some of the questions from the Tiger platform first. So on the Tiger chat, you can actually key in your questions to ask the management team of Thakral today. So Mr. Beetle and team, one of the questions that I'm seeing is, in the face of the global market competition, Thakral Corp being a very diversified business with a lot of different kind of segment business, what is the mode or the growth strategy of Thakral in the next 1 or 2 years?
Okay. Firstly, we've got a very strong management team for each of the businesses. So each one focuses on their own areas, right sector, right segment, right countries, and the right time. Right. The listed company in Australia, as I mentioned, you can visit the site directly. That's on its own growth path, a very strong growth path they're looking at. So I'm not going to add more comments for that. Japan continues to look very strong. As a market, Japan, we continue to really look at it as is there another sector that we can invest into apart from just being in the commercial? So as part of our recycle strategy, we'll continue to look at Japan. We like Japan very much, but maybe looking at expanding, broadening our sector, not just office and hotel, but we like the hotel for now. But we're looking at what other sectors can we grow in. India, like I mentioned earlier, we are super excited. This particular development that we are working on is a it'll take us 7 to 10 years to develop the whole 5.5 million square feet. So that's a very strong upside potential for Thakral as we grow forward. We're taking on a larger stake as well. All right, and so these are basically very strong investments that we have here. We continue to invest. We call it like R&D. We continue to invest and looking for where do we go. What's the next big item for us, and where do we look at that? So, like you mentioned earlier, that we have small investments in different pockets, looking at that. But overall, that size is so small that we don't even talk about it here. But it's, when the right time comes, we'll sort of discuss about those areas as well. Back in the lifestyle section, the drone economy itself, we call it drone economy because that's how big the whole drone sector has become. Whether it's your digital action cameras, whether it's your and as you enter into this agriculture and enterprise drones, that's a massive area. So India, South Asia again growing very strongly. So we are again in the right place, right sector. With our so-called attempting to go into the local manufacturing, both on the agriculture side and potentially also looking at the enterprise side, looking very exciting. And the fragrance business with South, with the Greater China, China's back on its, you're seeing China's retail sales, etc. The numbers starting to, so-called show more life coming on board, and we are seeing that in our daily, in our hours, in our so-called numbers as well. Strong growth anyway, 22% plus every year on year. We've achieved that. So we're even looking at that whole sector coming alive even more than what we saw earlier. Like Dawson mentioned, adding more brands and more strategy. With current bodies IPO, upcoming IPO, that will unlock a lot more value for us. And how do we recycle that capital, etc., will also part of the exciting journey for Thakral going forward. Yeah, sorry, I hope I answered that. So we are touchwood, good position to be in.
Yes, I think you did answer some of the questions on how Thakral would develop this competitive advantage in this various business. As an extension of that question, earlier part of this year, we hear about the US tariffs. So some of the investors are concerned about will the US tariff impact any of Thakral businesses?
Sure. But US tariff, like we've seen, they've taken a lot, so for various shapes for each country. And not just directly not just directly for people who are selling into the US, but also for other slowdown in other sectors as well that are more impacted. We've been fortunate that our sectors are not really dependent directly on that, and our direct trade to the US is so small. In terms of profitability, is very small. So of course, if there's a global slowdown because of that. Clearly, we are part of the globe as well, so we will be impacted. But lucky, our fortunate is our sectors are not really directly in the headwinds.
All right. So good thing also that the tariffs also seem to have mellowed down towards now compared to earlier part of the year.
Absolutely.
Yes, Mr. Beetle and team, there's one question on the Tiger Life chat that mentioned 631 million total addressable market in the India agriculture market. Could you share how much of a market share does Thakral have in India agriculture sector?
Okay, I think this is sorry, maybe we were over optimistic. The market size clearly is that large, and this is reported as we've featured there. Basically, but we've just kicked off our unit back in December. So we are at the moment only hitting maybe less than $2 million worth of revenue coming from that. So we're just kicking off that whole business. But we've aligned with ourselves strong Chinese manufacturers, which basically looking at some of the components to be assembled or manufactured in India that will help with the whole government's push towards Make in India. And that's our goal is basically to facilitate the over 500 factories that have been set up for drone manufacturing in India, and facilitated them to be able to supply competitive drones to the agriculture sector. And we being both in China and India have that experience, so we basically saw ourselves as we should jump right in and be the middleman and start supplying this.
Okay,
hope
thanks.
that
Yeah, thanks, Mr. Vito, for that detailed explanation. Another question would be, just now we did saw your presentation on the geographical region revenue contribution. Would you
yes.
be able to share about the drones business contribution? I mean, by business pillars instead of in geography. Yeah.
Because like you mentioned, you see the South Asia. South Asia is practically all the DJI and the accessories and the cameras and gimbals and all that. We like to present it as one big package. So that grew from 66 million for the half year to 86 million in this latest half year. 30% growth there.
I see. So the South Asia business is where the drones business are contributing to Thakral's revenue growth.
Yes, absolutely.
I see. Okay, so maybe I did not catch your presentation earlier. So does Thakral also has the distributorship for DJI drones in India as well?
Yes, we have, but at the moment, because there's you can't import full drones, so we have to figure out how to get a manufacturing either the rules change or we start manufacturing. So we keep exploring that whole discussions. So once we crack through that, it will be very exciting if we do manage to do it.
Yes, I think that's what also I understand previously as well. There were some rules and regulations that limits that.
Absolutely.
But, recently we saw the Shanghai Corporation Forum where President Xi and Prime Minister from India shaking hands and discussing. Probably there is some breakthrough over there, and would Thakral be the prime position to capitalize on that?
We are very excited. Yeah, let's hope that there's something materializes.
All right. Okay. Thank you, Mr. Vito. Let me move to some of the questions on our Zoom chat as well. So we understand that this question is from Mr. Tan, actually. We understand that Thakral Corporation is vested into so many sectors globally. Okay. So in terms of the growth strategy of the company, are there specific markets or specific new businesses that you guys will be targeting this year or next year?
For me?
For you and your team. No.
Okay. No, I'll take it. I think we've got a lot on our plate. Like I mentioned, India is definitely a market that we are strongly focusing on at present. With this investment in the land that we did, and with the so-called Nespresso distributorship, clearly that opens up a large footprint for us to work on over the next so-called 8-10 years for us. And India's well on its path of becoming the fourth largest economy, and going strongly in that direction. So we are definitely looking at how do we add that to ourselves, to the portfolio. The rest of the sectors, I think for now we are pretty much very very comfortable with where we are growing each of these areas. We continue to look at how do we for the so-called the aging population in Asia, and with our investment and with our long history with GemLife in Australia, whether we can transform that in one form or another that suits Asia. We continue to look at that, but that's more like we mentioned, a lot of R&D going in that direction to understand a lot more how culturally this can fit. So for now we're nowhere near to that, actually going in there. Very excited about Current Body's IPO. Yeah.
Thanks for that answer. Next question from our Zoom chat we have from Mr. Darrow. He mentioned that he noted the partial divestment events from GemLife. So which segment or geography will management first invest into after the GemLife divestment? So any any kind of a structure or framework or parameters that you consider to decide one over another?
Okay, we actually did not divest from in GemLife because we went from the IPO. So at the IPO we bought more shares as well. We added to our portfolio slightly because the dilution in percentage came from the fact that we raised 750 million into the entity. So our so-called resultant shareholding came down, but we have very high confidence in the management and the sector in Australia. So we haven't divested from that. What we did is we had a loan that we had provided as part of our shareholding, which has now come back. Of course, a lot of that we have been pre-allocated to so-called growing some of the segments that we talked about earlier. I think maybe quite a fair share of where we will be placing it because a lot of exciting businesses. We like the drone economy. We like the Indian development sector as well. Plus Japan also. We like Japan as well. Yes.
Okay.
And
thank you.
the beauty sector, of course, but which will have its own capital from the current body coming in. Yeah.
Thanks, Mr. Beto. I hope that will answer Mr. Darrell's question from the Zoom chat. The next questions, we will be talking about Thakral's dividend policy. Before I read that question, I have a quick look at the Thakral price performance in recent months. I went pretty surprised. Wow, the performance this year was fantastic. I mean, aligned with your 5-year chart earlier, this year was really a very good performance. So the dividends question is, your dividend for first half of this year was 3 cents per share. With such a big profit that you have shared with us in this presentation, should investors expect a higher dividend in the second half or in the future?
The thing is because we are on a growth cycle here and taking on a few more sectors as we talked about earlier. So the cash flow of although we saw a strong IPO, but the cash flow point of view, we have been basically sitting and we also did a share buyback for the last 2 months. Basically, whenever the window is open, which is very short for us because so much is happening at the company. So we did conduct a share buyback of almost 1 million plus shares. We bought back this year as well. So answer is yes. I mean, we'll look at the dividend policy as when we come to that in our February meeting. Then we'll make a decision at that point. At this point, I will say the overall strategy for the next few years will be more focused on growing the company strongly and giving higher shareholder returns. Whereas the dividend cash payouts will be measured with the actual cash flow that flows in.
All right, thank you, Mr.
I hope that
Beto.
answers it. Yes.
Yes, I think a lot of investors now are looking at Thakral stock right now, given the
Thank
growth
you.
that we see.
Thank you. We appreciate. Yeah.
Yeah. So, would it be comfortable to share when you talk about dividend policy? Is there some kind of percentage that we look at towards the profits of Thakral that will be allocated to the dividends payout?
Yeah, I think we actually that's part of our policy that we issued earlier. We look at 20% of our, I mean, without taking one-off events, 20% of our profits would be allocated to the so-called dividends, and yet with the caveat that provided we have the cash flow, smooth cash flow to do that. But again, keeping in mind, one-off. This was announced before we had any discussions about an IPO for GemLife. So we will be looking at that policy again whether later this year or early next year, and then looking at how we sort of whether it needs to be tweaked or whether we are comfortable with it. Looking at the cash flow statements. Yeah.
Okay, thanks, Mr. Beto, for that clarity. So, you heard from the CEO itself, 20%, but of course, subjected if there's new business that we need to go in, the management team also need to revise this policy as well going forward.
This is of the net profits basically. Yeah.
Yes, so that's the baseline that we are looking at. Okay.
I think the good guidance, I mean, we've tried to pay 4 cents over the years. I think we'll continue to make sure that is made available.
Yes, not only we want to look at dividend increase, we also want to look at the stability of the dividends as well.
And total returns as well, yeah.
And total return as well, definitely. Given looking at this beautiful chart that on the screen now, 138,
Yep.
Today's price is 150. Okay, so
Yeah.
the next question would be, like I mentioned earlier, Thakral has a very diversified business, which has pros and cons. Example, the tariff situation with a diversified business, you might be less impacted. But would Thakral consider simplifying its business further? Because now we have a lot of segment in Thakral Corporation. What's your view on that, on business simplification?
Yeah, actually, if you look at from my perspective, we're very simple. We've got one investment arm and we've got one lifestyle arm. That's pretty much our business. So each one generating strong returns. And our focus is how do we get our IRR returns. We're basically giving you ROE 18+%, and so that's our focus, is how do we continue to grow each business very, very strongly and moving forward as well. Then the natural unlocking will happen, as we've seen in current body and in GemLife. So basically, that's our goal is ensure that the businesses that we are growing can create value along the way as well. We provide strong operational value add to the investments we get into as well. So we are doing the same thing now with our drone manufacturing with Bharat Skytech, and also with the software entity in Skylark. So where we are applying all our operational knowledge as well as the investment knowledge as well.
Okay,
Yeah.
thank you, Mr. Pito, and
Thank you.
and your team for being patient answering our questions
Thank
today.
you.
I
Our
think time is
pleasure.
it's 8 o'clock, so his time is really tight. Let's do the last 3 questions to round off today's session. So the next question is from Mr. Chang. He noted that the commercial properties in Japan in your portfolio are fully rented out, and it seems to be a very stable source of income for Thakral. Are you
Right.
planning to expand or buy more buildings in Japan or any other stable markets?
Actually, like I mentioned, because for us, we look at the returns on our, the IRR returns as well from each investment. So when it reaches a very nice stable position, sometimes I'm not saying that is the decision yet. I'm saying sometimes that is the point where we actually say, okay, now time to move on, because it will not help us to generate the 18% or 15% or 18, whatever the high teams that we try to achieve. So then we have to sort of selectively look at saying, okay, let's recycle capital and find other sectors to get into as well, or other markets to get in. So that's the way we operate basically. But yes, Japan is looking, as a country, looking very good. As an office sector, I liked it obviously. But I'm seeing also that we're coming. There's a lot of demand at this point, which may be sometimes a good point to say, okay, let's recycle some of that capital.
Okay,
Just to add, a lot of properties have more than doubled in value since we acquired them.
Okay, that's nice to note. I'm really looking promising on the Japan side. So let's just take one more question in the interest of time. This is by Mr. Tan. He is saying that the global economy may not seem to be very pretty right now with the persistent interest rate environment that we are in now, the high interest rate. Consumer discretionary goods or luxury goods tends to be affected in such an environment. Does Thakral see any impact on your consumer discretionary business, the luxury lifestyle business?
Dawson, you want to take that?
Yeah, no, I mean it's a very good question, right? Of course, we could have said maybe growth in some of our brands could have been higher, right? But we are, I think, quite blessed with a very strong portfolio of brands. If you look at the title page there of the lifestyle segment, Maison Margiela is now one of the top fragrance brands in China, with a lot of investment also behind it from the brand principal. So I think that has helped us in a sense weather any slowdown in discretionary spending. It's also a brand that is not, I wouldn't call it luxury. Yeah, it's still sort of accessibly priced in the world of fragrance or in the world of premium goods. And similarly, if you look across to India, I think both our DJI consumer business with action cameras, right? There's continued demand as the middle class in India rises. And of course, Nespresso is new to the market, at least officially, but in a sense, we have been benefiting from the fact that a lot of Indians had been buying coffee machines, in Singapore or the Middle East or Hong Kong before. And now we can actually offer them the coffee in the market. Yeah. So I think in a sense we are somewhat shielded from any of these effects. And again, we're not really in what I would call the luxury segment, right? Where you'd have maybe the recent headlines on LVMH or Kering maybe suffering. That hasn't really affected us, right? Because we're more in a prestige or in a premium sector where consumers still spend, and where sometimes they also, even when times are tough, still want to treat themselves and want to indulge in sort of like the daily treats or the little daily luxuries, right? Rather than the big spending items.
All right, great to hear that we still have not really seen any big impact on any slowdown on the discretionary spending on Thakral business yet. So that is, I think I would take it as a good news that the second half of the year would be even better than what we see now. So I think that is all the time that we have today. I'd like to say a very big thank you to Mr. Beetle, Mr. Thorsten, and Mr. Anil, the management team of Thakral, for joining us today. We hope everyone on our platform, on YouTube Live and on Tiger Brokers as well, enjoyed this informative sharing session by Thakral Corporation. In case you do miss any part of today's sharing session, you can actually watch this webinar on our SGX YouTube channel. So do also visit our website to get more updates on the upcoming investors education programs and initiatives. Our next Corporate Connect will be on next Tuesday, 9th of September. I will be hosting for you as well at 7 p.m. featuring Hyphen Pharma International. So here I'd like to wish everyone a very good evening and good night, and I hope to see you again next week in the next Corporate Connect. Take care, everyone, and good night.
Thank you.
Thank you, Mr. Peter.
Everyone. Thank you. Thank you, everyone. Thank you. Bye.